Good morning, everyone. Thank you for hopping on this webinar with us this morning. Just a few housekeeping things before we get started. I see everybody is muted, which is great. If you have a question, feel free to, at the end, either unmute yourself and ask, or as we go through the presentation, if you want to use the chat box feature that's at the bottom of your screen, just to type in a question for Mark, we can address those at the end. And then again, this is being recorded, so we'll send the recording out to you whenever we have that ready, and it'll also be on our website as well. So I will just give a quick introduction of Mark, and then he can go ahead and get started. So Mark Nelson is a Senior VP of Surety and Construction Brand Manager for Assured Partners. Mark specializes in construction, providing advocacy and consulting services to contractors with surety programs up to $1 billion. And Mark brings more than 28 years of surety experience with a background in surety and construction. So with that being said, I will turn it over to Mark.
Okay, thank you, Jen, and thank you to ACI for having me. I've learned some of these webinars, sometimes it's really hard as a speaker to kind of bring the energy, and also I guess, you know, a good presentation always has interaction, questions from the audience. So to try and break the ice and maybe encourage a little bit of participation, for the first person who asks a question over the chat button, I'm going to send you this 4-pack of quilted TP. It's ultra plush, by the way. So the very first chat question that comes in, put your address there and we'll get this to you. So if that doesn't start the chatter, I don't know what will. So again, thank you for having me, ACI and Jen. This is my 28th year of advising contractors, being an advisor to the construction industry. And I have to say that this is probably the third crisis that I've been through. The first being 9/11. I can recall on that day I was leaving my office, going to jump on an airplane. And by the end of the day, I said to myself, you know, nobody's going to get on an airplane again. And I think it was probably 2.5 weeks later, I was back on that flight to Minneapolis. So people's memories can be short, and I think there's a really good lesson there. The next crisis was, you know, 2007 into 2008, the start of the Great Recession, and that recession had a much longer wick on it as far as really being hurtful to the economy and to the construction industry. And I think we can learn a few things from that and maybe share a few things from clients that I do business with that got them through that rough spot. So if we think back to that crisis, we all learned about subprime mortgages and default swaps, and we also learned about TARP money. And that was a government handout to mainly the banking industry and some insurance companies to kind of keep them above water. But that free money came with strings, and with these PPP loans, there's strings attached to that too. So we'll touch base on that for a little bit. I'm going to share my screen here for just a second to give you a snapshot of the surety industry. Let's see, share screen. Jen, is that up? Can you see my graph there?
Yep, you're good.
Okay, so what we're looking at here on the left-hand vertical column is we have surety premiums, and you'll see as we get out to 2018, a little bit over a $6 billion industry. And then the line kind of going up and down there are losses in the surety industry. So you can see after 2001, you know, we had some very severe losses in the surety industry, and those were due to things like companies like Enron was close to $1 billion surety loss. We could talk about that for a long time, but we had a lot of bankruptcies in the auto industry. retail industry, a lot of those people needed surety credit for all different sorts of things, getting customs bonds, stuff into the country and whatnot. So that was really a bad time for the surety industry. But if you look out to like 2007, 2008, 2009, the Great Recession there, right? You would have thought that the surety industry really would have taken it on the chin, and it never really happened. And maybe some people in the surety industry want to think they were really good underwriters and avoided these losses. But what really happened is that contractors proactively managed their businesses to a soft landing. And we never did have those big losses to the industry. So part of the point that I'm trying to make here is that, number one, you can manage your business through a crisis. And number two, the surety industry is coming into this latest crisis with very strong balance sheets and a very strong track record of profitability. And hopefully that will help the flow of surety credit as they are coming off some very strong years. So with that being said, back on April 7th, AM Best, which is an independent rating organization of insurance companies, came out and they downgraded the entire surety industry. They took it from a stable to a negative outlook, which is fairly alarming, right? Why did AM Best downgrade the entire industry to negative? And it really is a lot of things that we've all probably been talking about and watching webinars and discussing with the CFO and the president. And those challenges are things like the supply chain, cost of materials, the government's reaction to this. And those states where the government has said, you can't work, you're all shut down, this state, it destabilizes all sorts of economic factors that can potentially hurt contractors. We've seen owners, the Kentucky Department of Transportation just canceled their May and June lettings. We've seen Ohio Department of Transportation push a lot of work they intended to sell this year into their next fiscal year. And there's concern just, if you think about the universities and how much work that they have provided to the construction industry, what's their program going to look like on the go forward? They've got a lot of challenges. So the availability of work out there is a real concern. And these are some of the reasons why AM Best downgraded the entire surety industry. One other leading economic indicator that has come out is the Architectural Billing Index, right? So this is an index that basically follows what architects are billing on a month-to-month basis. So it's a leading indicator because if the architects are busy, that means there's going to be a lot of work coming out for contractors to do. And from March to April, that index went down by 20 points. And it's the biggest drop in 25 years. The next biggest drop was back in the 2008 recession. It went down 9 points. So if you want to look at something that has given our industry a tremendous amount of uncertainty, that ABI index is something that has really gotten people's attention. So how have the, wait, I got to check here. Somebody said in the chat, first question, how are you? Oh, it qualifies, Al. So if you want to tap out your address there and send it to Jen or myself, we'll get you your prize. So how are the sureties reacting? What kind of feedback are we getting out of them? And actually, most of my initial calls from underwriters have been opportunistic underwriters who are saying, hey, Mark, do you have surety companies who are making knee-jerk reactions to this, making statements that make you or your clients feel uncomfortable, because we see this as an opportunity to find new clients. And that's fantastic. As time has gone on, I've also had some underwriters who have made comments like, we see a lot of headwinds, maybe not this year, but 2021, a lot of headwinds against the construction industry. And we're looking really hard at our C players, our kind of, below average clients, and deciding, do we want to go into this down cycle with them as clients or not? And that should be concerning. We do have some carriers who grant out surety credit to infrequent users by just using credit score. So in other words, you don't provide the surety with any financial information. They just get business and personal credit scores. And one major market in that sector has come out and saying, we're not accepting any new clients. That's something to take note of. All of our sureties have kind of come out with a wish list where they would like to see addendums to bond forms or addendums to contracts that allows for either more time to complete the contract or additional compensation if unforeseen COVID related issues come up. And that's a great thing. It's a really hard sell to owners, right? Owners want to push all the risk down. I would say if you have, really good long-term private clients, that they may be open to some of that, but it's worth a try to try and get some of these addendums to your contracts. I get some different contract language, but I do see it as a pretty difficult sell. So, what did contractors do back in 8, 9, 10 to kind of, keep their surety relationship strong and growing? And I would basically suggest two things: to be proactive with your surety company and to ask for a meeting. It may be the meeting turns out to be something like a Zoom call here, and that's good. But after you ask for the meeting, the next question is to ask for an agenda. What do you need from me and what do you want to talk about? So this gives you an idea as to what their hot buttons are and an opportunity to sit down with your agent and prepare for the meeting. If you're a frequent surety user and this is the first time you've met your surety company, frankly, you might want to look for a different agent. The banking industry, the surety industry are always preaching, you don't want to get to know your banker in the bad times or your surety company. All the financial information is really important to the surety company, but their confidence in your management abilities and proactiveness and knowing who you are to get through this is equally as important as your balance sheet. So prepare for the meeting, ask the questions, and then I think you need to expect that the surety companies might be digging in a lot more than they have in the past. Maybe you've only provided your surety with an annual financial statement or maybe just a semi-annual, but I think you could expect that as we get late in the year, they might be interested in a September 30th financial statement. One item that they're going to take a hard look at is your work in progress. That for a contractor and for the surety is the forward-looking, where are things heading sort of information, right? Everything on your balance sheet is historical, but that work in progress tells what the future looks like. And you may go through a process where you look at all of your jobs and share with the underwriter that you've rebudgeted all those jobs. Maybe some had some delays in it. Maybe some had some material issues. Maybe because of all the safety protocols, production isn't what it used to be. But let them know that you have rebudgeted and looked at all your jobs and feel like you've made adjustments to kind of accurately reflect where you're at. I think sharing with a surety a cash flow strategy, what you may try and slow down some outflows a little bit. Maybe you pay your most critical past subs, on time, but try and slow down some of the payments, and the same with subs downstream to material suppliers. But the other side of that is, what can I do to kind of increase the cash flow? Am I going to send in a billing to an owner and have a process where our accounting department calls them 5 days later and says, do you have my billing? Do you need anything else? Am I in the queue? Am I going to get paid in 30 days or whatever the terms are? Just to be really proactive on getting the money into the company a little bit faster. One other thing to do is to sit down with your banker prior to your surety meeting. That's sometimes the banker can be a little bit easier sell, because they're usually first in line with a secured interest in your business assets. And your surety is an unsecured creditor. But it's really important to a surety company that if you get in a cash crunch, that you have a place to turn to for cash. So if you're able to reassure your surety company that you're on good terms with your banker, or maybe it could even be a little bit rocky, and maybe you've got some bad vibes with your banker, and I'm being proactive and we're talking to another construction lender who I've been referred to. But reassuring a surety company that you're really solid with your banking relationship is critical to your surety. I think back in 2008 and 2009, I spent a lot of time with clients of mine pulling out the G&A schedule and going down it line by line as to where you could possibly tighten the belt. And I think that's a pretty good exercise. You've got to balance that with, you gotta keep your key management team. You can't stop with building talent within the organization, but there may be other items that you can trim up. Discretionary spending. Frankly, a lot of times it starts with the owner's compensation. So that's definitely something to look at. For some people, this may be a really good time if you've got a really solid balance sheet from an acquisition standpoint. In all small businesses out there are continuity, perpetuation issues, and it may be time for some people looking to sell out. And if you can make a strategic acquisition, this might be a really good time to look at that. I think another exercise that a surety company would really like to see is a budgeting and a forecasting. And a lot of times the way we see that is putting together a budget or a forecast, maybe for the end of the year and for 2021. And in that forecast, you maybe have a optimistic forecast, a realistic, and a pessimistic. And what comes along with that pessimistic forecast is, if I get to certain benchmarks and I'm not where I need to be, I need to pull a lever to do something a little bit different. And some of those benchmarks you can be looking at is really your gross profit and backlog. If I get to the start of 2021 and I don't have gross profit and backlog to cover 4 or 5 months of overhead, I need to be making some changes. I think one thing that we saw and we learned is that sometimes you can get into decision-making paralysis, making really hard decisions. And a strategy of waiting for the market to come back is sometimes not the best strategy. So making those hard decisions early on um, um, seem to be a better plan than just trying to hold on longer and longer. So being proactive. One item to keep after from a subcontractor and a general contractor perspective is financing, right? We need to know where the money's coming from and understand how these improvements are going to be paid for. So I'm mainly speaking to the private side of the construction business. It's a fair question. And I wouldn't be bashful about asking where the money is coming from. I think from subcontractors, you can expect maybe some more surety needs than you have in the past. So general contractors are trying to protect their risk. They know that there's going to be stress on the subcontractor community. We're probably headed to a period of more competition, less work to look at. That equates to slimmer margins. So, you may find general contractors and some of the largest general contractors around the tri-state already do it. They may be asking for your financial statement and for them to kind of be a surety underwriter, or they may be asking for more bonds. So if you're a sub and you haven't needed much surety credit in the past, you might anticipate that will increase. And then make sure the bonds are legitimate. There's another exercise here for your surety agent. You want to make sure that the surety company is licensed to do business in the state of Ohio, and that they have an AM Best rating of A- or above, and that they're legitimate. Unfortunately, there has been cases over the years where we have bonds from sureties that their financial statement is shaky or they're fraudulent. And your surety agent, there are processes to and best practices to get the validity of a bond, and oftentimes that's calling the company that issued it. The Surety and Fidelity Association of America has a program where you can get, there's a phone number for every surety company to validate bonds. So that's something that we want to keep an eye on as well. And if there's bad news out there with your surety company, they can react better to conversations about bad news. It happened all the time in 2008, 2009. What they don't like is surprises. So don't surprise your surety company. Okay, so maybe moving on a little bit here, kind of talk about these PPP loans. There's been initially a lot of limited guidance on this. There's been more and more guidance coming out. There's a webinar every day that you could join on with a CPA firm or a law firm talking about these loans. I think when they first came out, they always used this word uncertainty. Do you have uncertainty in your business, uncertainty to the future of your construction organization? And to me, that's a pretty simple test. The ABI index, if that doesn't create uncertainty as to the future, I don't know what does. But that, to Google that ABI index and put that information in your file there as part of your documentation is probably a pretty good idea. As more guidance came out, though, it switched from kind of not only uncertainty, but do you have an economic need for this money? And that provides kind of a whole new level of gray area to be able to support this genuine economic need to have this money, right? And so what, we've been telling our clients are, talk to your banker, talk to your CPA, talk to your attorney, talk to your trade groups, right? So AGC of America, ABC, even surety companies are kind of chiming in on this. I saw an interesting letter from Traveler Surety just yesterday, or it was Monday actually, and it was a letter that went out to all of their surety clients. It had the normal disclaimer that they're not your attorney and that every individual contractor has to evaluate whether they need this PPP money or not. But they brought up 4 topics, and I'm just going to paraphrase this. The first topic they brought up is that we as a surety company don't know the impact of COVID. And we probably won't know until the third quarter or the fourth quarter, even longer into 2021, what the impact is. So this is concerning to Traveler Surety. They made the point that the CARES Act mentions that, do you have access to other capital? Do you have access to bank lines, sort of a thing? And Travelers just makes the point that, sure, a lot of our clients do have access to bank lines. Some of them are untapped, but we as a surety company get very concerned if you're using your bank line of credit for operational purposes. If you're deep into your bank line because you need to make payroll, that's a very negative indicator to a surety company in most circumstances. And then Travelers went on to say they're really concerned about future work, which we all are. And lastly, they said we as a surety are concerned with our surety clients about the quality of their receivables, because inevitably there probably are some receivable issues out there with this very broad economic impact from COVID-19. And then they just kind of summed it up and said, our PP loan to our clients, these loans to our clients help guard against all of these risks that we just mentioned. So I think it was well thought out and interesting, and it provided one more piece of documentation for contractors to put into their file to justify why they're taking the loan. And there's a lot of other documentation, how many projects have been delayed, have been canceled, what are the internal deliberations that you're having as a company justifying taking a PPP loan. So all of these sort of things really help document, and it's really important, this documentation. I would remind everybody that the Treasury Secretary came out last week and said everybody who gets more than $2 million PPP loan will be audited. And if you take that money and you didn't need it, it's not going to be forgiven, and you're subject to criminal prosecution. And his comment after that was, that's a big deal. So I think gathering information from third parties on this and documentation is really important. I mentioned the TARP loans, kind of another government plan of action to prop up the economy when things were going really bad. And that TARP loan was about $700 billion. So the original CARES Act was 3 trillion. So it's about 3 times larger. And I was doing a little bit of research on the TARP loan. There were 33,000 different whistleblower complaints. So these are people who are calling foul on a company they know, or a company they work for, or the company they are working for, on this sort of a thing. And I think, these whistleblowers, what I read is they get between 15 and 30% of what the government collects back. So there is definitely a word of caution there. There are strings attached to this money, and there has to be a need, and there has to be really good documentation. But I do come back to the uncertainty of the future here, which the construction industry is headed for a rough patch. And I think there's some really good solid ground to stand on in accepting these loans in most cases. Um, let's see, I've gone on for about 30 minutes here. Um, how are sureties looking at these PPP loans in their analysis? Um, when they're aware, and I would make your surety company aware if you've gotten a PPP loan, can be a really good positive jolt to the balance sheet. So it comes in as cash, and then generally you have a liability. Um, Sureties are asking questions: what amount do you anticipate will be forgiven? And a lot of times we're hearing from clients that maybe their payroll isn't as high as it was this time last year, all kinds of different factors. Maybe some of it they anticipate is not going to be forgivable, but there's generally kind of an estimate of what they think will be forgivable. And a surety company can look at that and basically what's not forgiven can be converted to a 2-year loan. So you got cash coming in on the asset side, and then generally you have a liability, a short term for 12 months, and then a long-term liability. And then once you get through that period and substantiate the forgiven portion, most sureties are going to drop that down into equity. So at the end of the day, you would have cash and equity for that portion that is forgiven. So that's a real positive thing there. Maybe to kind of wrap this up and see if we have any other questions out there, just to sort of summarize the talk today. Don't surprise yourself or your surety company. So get really deep into the costs, the forecasts, rebudget jobs, right? Assure your surety that you really have a really good handle on your costs, right? If there's bad news, get it out there and let's deal with it. There needs to be a plan going forward, and your surety needs to know that there's a plan with pivot points. If certain things don't happen, there need to be pivot points that you would change. A strategy, and I have heard it from clients and good businessmen back in 2008, business ladies, who said, we're really waiting for the market to change, and that strategy seemed to cause more problems than it really was a solution for most people. So communicate, be proactive with your surety company is the message for today. So I do see we have a chat item here from Caroline, and there will always be a need for construction post-pandemic. What sectors do you anticipate will experience the most rapid increase in opportunities? How should those contractors not become overextended? Well, I did read an article, interestingly, from the Design Build Institute of America, and one of the people out of that organization had predicted a tsunami. That was his word, a tsunami in construction, in manufacturing, and pharmaceutical industries. That doesn't happen overnight. We're probably a year away from that. There's a lot of planning that needs to go in, but there is I think from a government standpoint, some incentives, and just to bring manufacturing back from abroad, particularly in the pharmaceutical, medical devices industry. I do think from like warehousing still has a lot of legs underneath it and will be a growing industry. So I think we're going to have to wait a little bit. We're going to have to get through this valley. GDP is, most people predict that it will probably drop for the year, but there is momentum uncertain sectors going into late 2021. So I hope that helps answer your question, Caroline. How to not become overextended is, we could probably spend all day on that question, but I think, for general contractors, their biggest risk is subs doing what they say they're going to do. And, price might not be the most important factor with competition creeping up. It's who's going to do what they say, who's going to deliver, their work on time, on budget is a very important factor. So I would say for general contractors, your pre-qualification of subs is something that is going to be vitally important, the success going forward. And then from a subcontractor's perspective, you want to partner with those right general contractors, and just make sure that you have the resources to deliver on your contracts. So I see another chat coming in. Do you sense any shifts to non-PPP construction lending starting to develop, whether lines of credit to contractors or project financing? I do, we've got some really good construction lenders in Cincinnati here. And I'll be frank, I think Northside Bank and Stockyards Bank, we've got a few clients with other large banks, but those guys have done really well and been great friends to the construction industry. And like some of the opportunistic surety underwriters who are calling and see this as an opportunity to find new business, I would think your people who have been construction lenders, are in the business, who understand the business, that they're going to be looking for new clients as well. I'm not a banker, but I would imagine that some clients or prospects of these banks who do have PPP money, it might make it a little easier for them to get in and increase their line of credit, extend more credit, just knowing that they've been able to secure some additional cash to their balance sheet. So that is kind of, we're under an hour here, which is usually a good thing. If there are any other questions, comments, anybody feel free to speak up or send a chat over. Well, Jen, I think we've kind of wrapped up. We do have a couple of questions. I think I've addressed those. So I would like to thank everybody for listening in today. You can find me in the ACI directory. So if anybody wants to reach out and kick around a subject or a topic, I'll be really happy to do that.
Yeah, thank you so much for your time this morning. Great information. And again, everybody, this was recorded, so I will go ahead and send that out once I get our marketing manager to edit it for me with her skills, because I don't have those. But, and then if Mark has any supplemental information he'd like to share, I can attach that to the email as well. But other than that, if you guys have any other questions after this ends, feel free to email me or email Mark, and we'll get those answered for you. But other than that, that's all we have today. So everyone have a good day.
Okay, thanks everybody.